Hello and welcome. As today's date, it comes in that of Thursday, 8th of October, 2020. My name is Derek. This is the Money Charts channel where, like always, all bets, trades, and of the like, within each's own risk and their own reward. And in this video, we'll look at silver, multiple time frames, short term, intermediate, long term, go over a price analysis, and go over some mathematics to how I'm getting to where I think some of the price objectives to silver can be, and it's quite high, I think, and I agree with these numbers after mathematically calculating them. We'll go over those and how I calculated that. Also, earlier I bought some silver via UPS, and well, a horror story, but not that big of one compared to what happened today when I had my silver delivery come in. I'll go over that. So let's get started. By the way, the horror story ends up being good, but it could have been bad. So I'll give you a spoiler there. Therefore, we have a situation here with silver, which has had a great run from, we had the low of these $11 and slow change, at least spot price, and then it quickly rebounds up to 14, back up to 15. But before it was trading, and it has for so long, under the 20 level, got up to 20 at the end of last year, and it consolidated and congested near 17 change. And it got back to that congestion area into the middle of May, and it stayed there till the end of June. So a month and a half, and then the leg higher. So a convincing leg higher. Started its movement on June the 30th. It really got going at around the 20th of July, and it's been holding so far. It's holding within this key Fibonacci retracement, which is 23.6% down from this low, for the March lows and the recent highs. And we had that hit test in really the one day or one big move lower on August the 12th, and failing to break out on this attempt here, August 31st and the 1st of September, correctly succeeding for a while, but never breaking out. And then this move lower. Since then, it has resisted and congested with this area of previous support. Or so it may see, or may be, as in it could still be support congestion in this area if it breaks out. But the levels of key resistance and support are most certainly established. 24.50, 24.5 as resistance. Support, a couple key levels we can see here, that the lows on the the 6th a couple days ago, as well as yesterday at these levels, is around 23 low change, which was the general area of the resistance in here. So yeah, just a big consolidation period. And then when you shorten it out, you go like 4 hour, 1 hour, you can see more towards, it's just, a lot of this congestion and stuff, or sideways movement until it has a clear break. It never did get above this high. Rather, it strengthened the establishment of 24.5. And then it came back down from this high. Oh, what was the previous low before? 24.32, which it appears below it and spent a little time below it. And now it's approaching towards the upper end of this. Yeah, just more range bound, yada, yada kind of stuff more than anything. On the weekly time frame, correcting within the rising 18. And it's the first correction it has had since it really lifted off from it on the middle of June, since the start of the summer. And then it topped in the middle of August. So 2 months running higher, or 8-9 periods, whichever. But the last few periods being very, very big. And that's the key thing, and how the moves move big towards the end. I'm going to get into that within long-term analysis, like wave 1, 2, 3 cycles and stuff like that, because that's really where I think a lot of the projections of this is going to go for my prices from that. The 18 average of highs comes in at around 26 low change. And if we see that it's having a nice move, holding and staying above these areas, then it's showing to me that it's had that nice move. And if it corrects well from this low to this high, there's another key Fibonacci. I talked about Fibonacci from this level. Well, if you see from whatever the lows and highs happen to be right now, at least within these indexes, we're looking at highs of $29.92 and a low of $21.81. So high divided by low to the root of, I'm not going to calculate, but really getting above the 0.618. And then you multiply that again by the low of 21.81. Well, that's that key level. And it really comes in at around, let me just take a look at this more clearly again. I'd be looking at an area of around 27 change as far as that area. And holding and staying above there for a period of time, you see that from this move. And that's got a long ways to go just to even get above 24 2/3. as far as that's concerned. So yeah, that's what it looks like on the weekly. As far as the monthly, this is the one I'm looking at more for like, okay, holding this move. The 18 average of lows is just rising nicely above towards this area here is. And if it comes back down, it's going to have to hold in this previous area where we came from. So to me, this is going to be where the must hold area. And I think it will be. We'll see. Time, of course, will tell within it. But it's been the third time this market has made a move to get above the 18 average. A lot of times these markets could take a while to heal, and this has been the case, even if this has been the bottom, because if you consider the high was 2011 in April, and then it took like 5 years to bottom, and then another 4 or so years of the sideways action. That's a long correctionary phase. And amongst such, when we look back at way back when, this was a spot where we had the lows here in the early 70s at $1.25 or so. And then it goes up, and I got the exact numbers we'll see in a second, but up to about $6 change. And then this very long sideways consolidation. So wave one, up, correctionary move. Markets can correct via that of price or through time. There always has to be a little bit of price, and really quite frankly, this is about as the most we can be for little, if you put those two together, most and little. But it's to be such. So we have this price correction going from 636 down to 380-ish, pierce below 4. And then it just chops up and down, congesting at around $4.50 for quite some time. It approaches it in 1974, before I was born. And then now that I'm born in here, it's still $4 and change, and it stays that way until we see how it breaks it. And the setup that it gave us, I mean, this is just iconic within what I look for on the 18, how it, on so many fronts. First on the correction, and then within this, the 1, 2, 3, 4 period, so it just stays above the highs. And then you see how the breakout period, the excitation statement on the March period, and then how it continues to show strength at the highs, and then off she goes. Big move. And what a move it was. And in fact, this has got to highs that's, even though you can't see it on here, highs it's never seen before since. At least so the stories go. The highest I got stamped is 49. Well, I'll show you that in a second again. I think it's 49.45. And the highest stamp recently is 49.81 from 2011. So when we look at these numbers, which I'm going to do, bring these numbers up now. And what I got is 5 different columns: week, date, price, gain, and retracement. So we start off at week number 1. I mean, that just happens to be. It's actually 201 on my data, so I replaced 333 to 133, so on. And amongst it, November the 5th, 1971, the low was 127, which of course is this low. And then May the 17th, 1974, $6.01. So $6 even. A gain of about 4 3/4. And then the fall, and this isn't to the bottom, and there's a lot of cases this works out that way, but it's to the bottom of where the end of the range was and when it started breaking out from. On week number 221, so that is a span of 88 weeks, a year and a half. And the retracement from the $1.27 lows to the $6 highs was a 29.1% retracement. Not that big. It was, like I said, not much of a price retracement at all when it's only 29. But it's still something nonetheless when it's greater than 10 and 15. 429 week number, that's how long it took. 200 weeks, or about 4 years, to go from the $3 low to the $49.45. That's the highest stamp that I have with the LBMA fixing prices. I have heard that this number go to $52.50 before. Regardless of the fact, we'll pretty much say for both cases of 1980 and 2011, $50 even, as a nice ballpark rounding number. The gain was 12.291 times from the $3.80 lows, which would have been higher from the $1.27. We'll go over those in a bit more. And the retracement, now this is how I'm doing the retracement on this. This is the retracement from the $6 highs and the $3 lows. It was able to make a 235% retracement from this cycle, or from the $1 lows rather, from the $1 lows. It made a 235% retracement. So basically, what I'm looking at is key move from key low to key high. It got up to there and it got 235. And you know what? Those would be a general area of where I would think it would make it to. We'll see what 235 comes in on plan B. Now, what are we looking for the situation for what we're doing now? Can we do this similar sort of deal here? I mean, if anything, you could say that wave one is this low here. It goes up, correctionary move, mainly through price, and then your move higher. And what I'm going to do instead, I'm going to do this a couple different ways. Number one, I'm going to start the low, November 2001, November 30th. The price is $4.07. We can see here that the lowest price was actually down here, but I'm going to count these lows instead because you can see how much time correction went on after the fact from the early 90 lows. So a full decade of correcting. Okay. So therefore, the high in 2011, it took 492 weeks to get there. The gain was 12 and a quarter, which was really close to the gain of just the wave 2 cycle that we had before at 12.91, or the second wave higher. The correction that it had, which the bottom of the 11 dated the week of March 15th, is $11.64. Losing 4.28 times its value, 49.81 divided by 11.64. And then a retracement of 58%. Now, how do I calculate that if you're curious? You take current divided by the log of current divided by low divided by high divided by low, and then you get 0.58. So what I want to do now is I'm going to look at it from a different perspective. And this is where I want to go. Because as I view this market, this is wave 1 is the 1971 lowest to this high. Its correctionary move via that both immaculately through price and through time is this move here. And then wave 2 cycle is a significant break above previous high, above 50. And quite frankly, when you look at like stock market, so many different things, inflation of the fiat currency and how everything goes up in price, it only makes sense for such to be the case. So therefore, let's take a look at this. Week number 1 is down here, and that's at the $1.27 price. And then it hit the high 492 weeks later on January the 18th, 1980. The price of $49.45, a gain of 38.88 times higher. The correctionary phase, spanning from week number 492 to 1,570, over that of 20 years, went down to 4.07, losing 12.15 times its value, and a retracement of 68.2% from the $1 lows, 1.25. Which is a nice pierce below the 61.8. Just saying. Right now we're on week 2,554. So it's been about close to, and I guess 1/2 year away now, 26. Yeah, 1/2 year away from being 1,000 weeks from the 21 lows. So if we're looking at point A low, point B high, and then the correctionary move for that, and then the leg 2 wave higher. Within that wave, we have this correctionary phase from this to previous high. And the way I look at it is when this thing gets up to this, it's probably going to break these levels and go to some sick levels. Now, do I think it's going to go up to like 2,100? Well, if it does, that's it. Yeah, that's the mathematics in which I wouldn't be surprised if it were to go down to. As it goes, I'm looking at it before, it had a 235% retracement, and it really tripled the gain. It did a 3 times better the gain from the bottom lows to the wave 1 high than it did from the correctionary lows to the wave 2 high. So with that being said, if we have gains of 40 times from a $1 low, and we do better than 50 times from 4. Just something to keep in mind that one way. But that's still 50 times 4 is 200. If the price gets to 300, this retracement percentage would be 149. If it gets to 1,000, it would be 182% retracement. If it gets to 5, well, 226, and then just to calculate what 261.8% was, 18,392. My target is pretty much in between these numbers, somewhere around there. I got to think it's going to get near and above the 5K number within time, or around that for 226%. I'm not saying it's just going to always hit that same match, but this did hit 235. And it's, to me, I think would be interesting and would not be that big of a surprise to me on the highest peak price, the best absolute selling price. And to be able to say, yeah, I can predict this and all that. No, it just means that when you get close to those large levels, like for example, the amount of silver that I would own when the price would be 3,000 compared to like 1,500 would be much lower because I'd be selling. Even though I believe it's going to go higher, I still sell on the way up. And then I'd be like, okay, it goes to 5, 8, 9, 10, 12. If it does, okay, how do I aggressively want to do it? And a lot of it will be playing the gold to silver ratio. My big targets is playing that because a lot of it will be sold for gold. Okay, now as far as, I know it's Halloween time, so I guess a scary story because this happened today. But before today, I bought some silver and it was delivered via UPS, and there was a lot of delays and a bunch of weird mechanisms going on the web. It took like a week and a half for them to send it to me. That was a little fishy, first of all. Then they told me it was sent, yet I couldn't find it. And I know there's multiple ways of getting to different ways you could drop things off to my location, including a mailbox, which was where it was, and it was way back in a mailbox without the mail symbol stating there was stuff in the mailbox. There's a flicker just to say, hey, which is for Canada Post, where they flip the thing up when there's mail. And then I found the mail like the day later, and okay, there's my silver. Now I recently bought silver, and I bought 3 figures worth over 100 ounces in this case. And I made the order on Monday. They shipped days and Silver Gold Bull shipped it out yesterday. And it was shipped out this time via that Purolator. I got a text message at 4:30 p.m. Eastern time last night that they had picked it up in Calgary, Alberta. And a tracking number so I could view it on the internet. Then this morning at 9:30 a.m., I get a tracking saying that it is now being shipped for delivery about 60 miles away from me. And then it becomes, now it's after lunch, it's 12 o'clock or something. And I get another text message which says, hooray, your package from SGB has been delivered. Okay, well, and they said it's going to be like a virtual signature. So I'm thinking, what do I do? Do I text back that I got it? Hey, I'll do that. I'll bring my cell phone with me and then I'll just text back, okay, yep, got my silver. I wasn't sure how that was going to work. I was kind of curious and waiting to see, anxious to see. But things for the next few minutes got really interesting. Now, Purolator I've got a system where Purolator can automatically put packages. So, okay, that's where they be. But wait a second, I got dogs outside that be barking. And why haven't any dogs barked? I mean, even if they just put it out there, I know I'd hear it. All right, so this is kind of interesting. There's no boxes, no silver. 4, 5, 6 minutes. Then I get a phone call from my neighbor. Okay, and they clearly state my name as well, and asking if I bought silver. And I'm like, yeah, I got a text message like 7 minutes ago and everything. Well, apparently he opened it up and, found like the invoice thing, which obviously had my name and phone number on it. And he mentioned, I guess he doesn't even look at the package. He just opened it. I guess that's just normal for him. He could have obviously seen my name and address. And this is a number, street address, 22 digits lower than mine. I guess they can't tell the difference between a 5 and a 7. I don't know about that, but To me, 55, 77, all that, very difficult to tell the difference between those two. Meaning inadequacies to large degrees. Thankfully, my neighbor is as honest as can be. I will be dropping him off an ounce of silver for the honesty in which he had. Because on his end, he could have been like, how could he ever know? I mean, there's over 100 ounces of silver. Boom, and payday here. Of course, the conscious of doing something like that. I mean, that's just, human nature. How many people would be that, I don't know, what you insert adjective to do such a deal. And I don't think too many, but it just goes to show you in a human society race, of course, I was lucky to have a very honest neighbor. But on the end of Purelator, I mean, what were they doing on any end to try to scam somebody? They literally just sent it to literally the neighbor. They'd have no idea the difference between me and them. And that was that. It was... Well, so basically, as it goes now, I've got it set on my account with them that they're going to send to me via Canada Post, which works out well, at least so far. It has been with Canada Post. They've never sent to me via them. But every time I order via Amazon, they come right to my door. Literally, it is so amazing. They come the closest to anyone. They'll drive literally, because there's so many places you can drive to. But they'll drive. They happen to drive within like 2 feet, if not even a foot, from where the door is. So it's pretty cool with that. So that's how future deliveries go. After that, I guess I'm gonna have to physically go to like different cities to buy, I suppose, which I'm planning on doing in my local area anyway. I do have what I call what Drudgery, who's another YouTube vlogger, used to call it. I've been taking the vocabulary of paper rectangles, maybe plastic rectangles, but I mean, paper is a key term. I mean, people call about paper trading like in silver. I like digital trading because, I mean, paper is so passe as it is. I mean, that's so like 1920s, 30s, 40s, and even 50s and 60s were getting past a lot of the paper game. Totally in the 80s and 90s, we got out of it. But anyway, that is the silver video for today with that very, very scary story. Now, one of the video things I'm going to question just like if I was to be doing a finance class, I was thinking, you know what? Probably what I'd do is I'd ask a question. I'd make a test, exact same test, first day and last day, be the same questions. And in neither cases do you hand the test in to me. I mean, you'd write the test and we go over it as a class afterwards. And 7 questions. Question number 1. What does tangible liquid savings mean? Question number 2. What items qualify for tangible liquid savings? What percentage of your savings is in each item? What strategies do you have at this moment, within, of course, the subject? How do you invest and trade in items looking bad? How do you invest and trade in items looking good? What job number is risk-reward management? Now, of course, I've been coming on here saying, for me, risk-reward management is always job number 1. And I'm copying one of my teachers that do videos like this, Brian Shannon from alphatrends.net, who always says risk management is always job number 1. But I amplified the reward part, understanding both aspects of the fence. And I'm a big guy on the law of polarity. It's my favorite. Of all the universal laws, the law of polarity is by far my favorite of those universal laws. And I'm a big fan of science and laws and stuff like that. Not as much lately over the last half decade or decade, but more so like the 2010, 12, 13. For the first question, what does tangible liquid savings means? Well, tangible is stuff that you can get your hold on, that you can touch, that you have access to. Liquid, I mean, really that's to be done very fast. And then, of course, your savings. So fiat currency in your bank account, to me, is that of tangible liquid savings. You don't own it, but you own the accounts receivable to it. And most time than not, you can turn that into cash because it's so easy. And I mean, you just go to stores and you can buy with it. Very easy. So what items qualify? Well, the main ones, of course, fiat currencies of all sorts. Gold, silver are the obvious ones. But then I think you also have to go to specialty product items. But these, I hate to count things like foods, salts and sugars and whatever, because really, how do you sell it? I mean, you should own them and have them for yourself because they're great items and you can definitely barter them. So I definitely am a big proponent of owning these types of things. But I'm really thinking more towards the items of like baseball cards and comic books. Anything that you notice on a collectible, anything you can sell on eBay very fast, especially with the way eBay is. If you have like a Spider-Man comic book of something, if you have a Wayne Gretzky rookie card graded 9, even an ungraded rookie card in good condition in a regular sleeve, those things can be sold fast. And especially and only, please, when you know what you're doing with selling, at least for the fast sale, you can get a satisfactory price. So those, again, that's what would have to qualify for being in it. So when you look at your percentage of savings in each item, how much of it is in fiat currency related? So stocks, bonds, or stuff, accounts receivable. There's another way of putting it. Yeah, accounts receivable, fiat currency. So anything in a bank account, any type of savings account. If you got any type of gambling account, like I'm the type of person where you have maybe a poker account, a DraftKings account, you got funds in Binance, stuff like that. Funds on some sort of trading platform like E-Trade or whatever. I mean, those are accounts receivable, so I put them in a category. Your gold, your silver, cryptocurrencies. And then I mentioned maybe you do have great collectibles or artwork. Whatever that you know could actually be sold. Now, things like real estate, a house. If you live in it, no. I mean, yes, a lot of things that you have that you use, you can obviously flip when you know it, and it's got value. I'm not taking that. But as far as it does, to me, I would never throw that in your savings. Your vehicle, your car, same thing. You can turn it in, you can get some cash for it, but you're probably going to be driving it today or tomorrow, and so on and so forth. Okay. So how do you divest in items in good and bad? You realize, okay, I think this is going to go down in value. Do I want to sell a bunch now? Do I want to sell at peak high so that when I know eventually go down in value, I can look to be buying them back? When do I want to buy it back? How much do I want to hold in a certain item? If I want to get into something I don't own much or don't own any of all, and I think it's not the greatest of investment, but I think I should hold for diversification, how much do I want to put in? When you ask those questions to yourself more and more, and then try to actually work towards the best answers, well, yeah, so on and so forth. Thank you for tuning in. Have yourself a great day. Bye-bye.